In previous videos, I've tried to educate you on what is a stock and what is a bond. But the fact is, to create a really diversified portfolio of stocks and bonds would take an enormous amount of work and money for an individual investor. So for example, as I told you, one bond costs $1,000. How do you create a diversified portfolio of bonds if you don't have $1,000, if you only have $500 and you want to get started in investing? Same with stocks. If one share of Amazon is costing $400, how do you create a diversified portfolio of many stocks when one is so expensive? This is not a new problem, and in fact, way back in the 1930s, some people smarter than me created an idea of mutual funds, which was to allow the everyday investor, not the Rockefellers or the Astors who buy whole companies at a time, but the everyday investor to get involved in the investment markets. A mutual fund is simply a pool of a lot of different people's money that we put together and hire a mutual fund manager to make the decisions of what stocks to buy, what stocks to sell, and when. So a mutual fund can be invested in all different kinds of areas of the market. You will probably be very familiar with mutual funds that invest in the US large company stock market. But there are also mutual funds that focus on international large companies, international small companies. There will be mutual funds that invest in very specific areas of the market like environmental or healthcare. There are mutual funds that invest in the bond market, which is very handy because it allows you as an investor to invest in many bonds without having to pay $1,000 per bond. Your value of your mutual fund goes up and down with the values of the underlying investments. So say, for example, you have a mutual fund invested in what's called the Standard & Poor's 500, which is the 500 largest US stocks. If the stock market overall, the US stock market does really well one day, the value of your mutual fund shares will go up. If they do poorly one day, the value of your mutual fund shares go down for you and all your compatriots that are in that mutual fund together. So mutual funds offer a way for us as individual investors to get exposure to many different stocks and many different bonds and have a diversified portfolio.